Hello, everybody, and welcome back to the Dash Trader Newsroom. Markets don't seem to care about tariffs anymore, but what catalyst is driving these markets? We're going to try to get to the bottom of this today. My name is Michael DeGioia, Director of Educational Services here at Dash Trader, joined by my co-host Joe Molandrino, Global Markets Reporter with Nasdaq. Jill, how are you?
Good, doing well. Great to see you.
Yep, great to have you back. Um, So Trump announces more trade tariffs. There were tariffs mentioned for Japan, South Korea, a slew of other countries. Trump also announced 50% tariffs on Brazil. Brazil is reciprocating. So we've heard this story kind of since I guess that was April 2nd. It does seems like the markets are making new highs regardless. They just don't seem to care about tariffs anymore. I guess they just see them as negotiating techniques or whatever. What is driving the market at this point, in your opinion, Joe?
Well, there's a couple things here. We have to remember that June and the first couple weeks of July, there's virtually no corporate earnings activity. So you're operating in this vacuum of headlines only. And as we know from Trump 1.0, and we're certainly seeing it 2.0, that it's drinking out of a fire hose, whether you're looking at the big, beautiful bill, if you're thinking about tariffs and so forth. So that's all that the market has been focused on. We haven't gotten to that point until it kicks in really in earnest over the next couple of weeks and remains for the next 4 to 6 weeks that we're in earnings period, where we hear how companies are either digesting or planning for what we've seen come to clarity at this point. So I think that is part of it. The other thing is, Mike, and the markets, they just don't like uncertainty. The bill got passed. We know what tariffs somewhat look like. The one with Brazil sounded like it was more political than anything else, and that was apparently what was noted in the letter that Trump sent to the Brazilian government. It's interesting. I can't recall it word for word, but last week the former chairman of Target was on CNBC, and he was saying that as long as the cap is 20% for tariffs, that any costs will be absorbed, within the supply chain, and it
Yeah,
shouldn't impact consumers, 20% for 20%. So for example, if you're paying something for $1, it's not going to be $1.20. A lot of that can be absorbed along the way via the supply chain. Um, so I it almost feels as if there's nothing new to add to uncertainty and we're getting some clarity. So it's not like there was another big surprise that was dropped.
yeah,
Even geopolitically, it feels pretty quietish, not to jinx it, relative to the first couple of weeks of June.
yeah. I mean, it's incredible how 2 weeks can change the entire, um, you know, wall of worry to a certain degree. I mean, we were dealing with active wars, drone attacks, and missile barrages 2 weeks ago, and or a couple of weeks ago, and now it's we're kind of in this vacuum post
Right.
this vacuum going into earnings season, and
Mhm.
obviously we're just starting earnings season now. What are your thoughts about possible earnings trends going into the second quarter results? What are your thoughts? What is going to be the items to watch on companies' balance sheets and whatnot?
The last earnings season came in quite well, and there has been a reduction in estimates because of the expectation that tariffs are going to go into place at this point in time, right? So I think guidance is what's going to be a concern. But Mike, we haven't, I mean, there, with the exception of the valuations that many companies are sitting at right now, because for all intents and purposes, Nasdaq and S&P 500 hit, looking at the TV now, all-time highs. Chip maker stocks, all-time highs. And by the way, there's sectors within, let's call it the Nasdaq 100. I did hit on this the other day. I had identified that uh, the semiconductors and cybersecurity by a little bit higher of a margin, doubled the performance of the Qs. So if the Qs returned, it was like 8.25% year to date. I think that was as of Tuesday or Wednesday this week. The um, ETFs that track the semis and cybersecurity stocks doubled that performance, if not a little bit more. So, and it makes sense, right? What have we been talking about year to date? More AI that comes online means that your attack surface increases, right? So there's a need for cybersecurity. Clearly, defense tech is one of them. The semiconductor chips is what's powering it. So I think those two areas are going to be critical. And what's another interesting data point, we had a couple of companies on last week and this week that one of the companies called Bolt. It is a point of sale provider partners. They just announced a partnership with Klarna. And we had it on this week, and Nasdaq listed company Pagaya, where they work with 31 different lenders to aggregate funding resources and stuff. They both said that the strength of the consumer and their balance sheets, and of course we hear, fiscal policy and how much debt the US is in, the consumer balance sheet is actually doing quite well and they're spending. So it makes you think, okay, hedge funds pay for this kind of data. There's a reason why the market's up, and, the more widely accepted data doesn't necessarily show that kind of consumer confidence. But balance sheets for consumers look quite good. They're spending. Now, perhaps they're not, they're moving different areas of consumer discretionary spend around. The housing market is somewhat stagnant. So maybe what would have went into that is going to other areas. But when you look at these proprietary data points that are real time, it tells a very different story than some of the narratives that are out there. And the the market's a forward-looking mechanism. So,
Absolutely.
you know,
The strength of the consumer has been really incredible. But just to throw this out there, we have gold at all-time highs or near all-time highs. Crypto basically just, Bitcoin just broke out to a new all-time high, I believe today.
mhm.
Ethereum also on its way to doing so. The US dollar is, weaker. The big beautiful bill was passed on July 4th, and obviously it's expected to add more debt to the US fiat currency. I believe that crypto might have been, again motivated by the passage of the big beautiful bill because it had some effect on cryptocurrency. So that certainly was the catalyst for the breakout in crypto. But the weakness in the U.S. dollar, stocks are denominated in dollars. Obviously, gold is the old, kind of universal currency, and then obviously crypto is kind of the digital version of that, or at least Bitcoin is the digital version of gold. So we have all these inverse relationships at play. Do you think that that could potentially be the catalyst for this current move out? Is the big beautiful bill, weakness of the dollar, and the inverse relationship between all these asset classes and the U.S. dollar?
Those are all excellent points that were made. Gold has just had an incredible run over the past year. Let's not even call it year to date. From a technical perspective, and Mike, you are the expert here, but if you look at, and even, me, who's certainly not a technical anything, but even I can recognize the pattern that we're seeing in Bitcoin. But to your point, the fact that we're seeing framework move through the legislative process is highly encouraging. Um, it feels as if, or it seems as if, that the Bitcoin's perhaps entering a new phase of price discovery. You're seeing liquidity signals are lightening up, which suggests that there could be more fuel to the fire here. Certainly having stablecoin legislation moving through, and we're starting to see that buy-in in multiple areas. It's not just a retail thing anymore. It's institutional. It's with the government and so forth. I think you're still seeing these new capital inflows coming in, and I can even tell anecdotally from the pitches that I get, and I get hundreds of pitches a day. As soon as the Genius Bill moved through the Senate, I got more pitches and press releases on funding rounds for different blockchain projects and so forth. In fact, one of them, I think it was the $123 million round, which is pretty substantial. Mike,
Wow.
there were three investors that stood out to me, and this was on the what blockchain was it? Was it? Okay, it'll come to me in a moment. But here's the three investors that stood out: Citadel, DTCC, right? And God, who was the other one? Not Jane Street. I'll think of it. Virtue. Virtue,
Yeah.
Citadel, and DTCC, right? Two of the biggest market makers.
Yep.
And how do you think things settle?
Yep.
DTCC, if that's not a sign that they are investing, and it's not just Bitcoin, right? They're investing in the infrastructure
Yeah, it's
and
the
they're
blockchain
thinking,
technology. It's the
right. And I
technology
think
itself.
that we're starting to understand the fundamentals of the different areas within digital assets. For example, when you trade, you pick different routes for different reasons, right? People
Hmm.
use different types of blockchain infrastructure based on the projects that they're working on or whatever their goals are. So
Yeah.
you're starting to see a more discernible ecosystem being formed. And Mike, we have spoken about this countless times. I've spoken about it on panels globally. It's one thing to have product introduced, right? Spot, Bitcoin, ETF products, and so forth. But until we got movement on regulatory framework, because it did not happen past, you know, administration. This isn't a political call. It's just the fact that there was a lot of pushback, right? That is the catalyst. Getting that framework is the catalyst. That's when you see things happen at scale. We're seeing the brain drain return back to the US. So it's more, I think there's so much more behind the underlying than just Bitcoin itself.
Yes, it's like an adaptation of the entire blockchain type of technology. And obviously we've seen that cryptocurrencies have been trading with technology, and it's not just an alternative to the U.S. dollar, but it is that as well. It's a store of value. It's a technology. There's a lot more to it. But as always, Jill, I want to thank you for your insights, and I'll see you in a couple of weeks.
Yes, I hope you talk about the Bitcoin chart in your tech session because,
I
like I said,
absolutely
it
will.
was glaring.
We'll be bringing it up now. Thank you so
All right.
much.
Thanks, Mike. See you
Take it easy.
soon.
Thanks as always, Joe. All
Bye.
right, so let's go to the charts and our market analysis section. Let me see if I can start that. I'm going to hit this. All right, so here we are. First one right up on there is GBTC, which is the ETF that tracks cryptocurrency, or Bitcoin specifically. Um, we got ETHE, right? We have this one is the ETF that tracks Ethereum, ETHE. So this is one of the earlier ETFs that track Ethereum. So both of these charts, I'm going to go GBTC. I mean, GBTC is a typical bull flag formation. So this would be the flagpole. That would be the flag right here. So this is a typical bull flag formation. Let's go to GLD because we talked about gold. Gold is also, that's a bull pennant. The difference between a bull pennant and a bull flag is that the range narrows as it gets towards the end. So this is a positive or fairly bullish consolidation in gold. SLV. Silver also breaking out to the upside. That is silver. Breaking out to the upside, very similar to the crypto chart. Let's go QQQ. This is the Nasdaq. So we have taken out the prior high, and we are above all of our moving averages. So that would say that the market is bullish and going to continue to stay bullish, at least for the time being. And so that's the QQQ. We have, what else do we have? We got, let's see, Apple, AAPL. Apple not looking quite as bullish as the market. Seems like some of the juice has gotten squeezed out of Apple. Not quite applesauce yet, but certainly it's not as juicy as it once was. It is consolidating at the top of this current range, so it probably will be going higher with the markets if the markets continue higher. Goog, also a little bit of a lagger as far as the Magnificent Seven go. So we got Goog and Apple, kind of the two laggers. We got Meta, right? Meta at the top of its range, putting in a double top, but taking out the prior high, which is a shallow new high. We'll see if Meta can continue to go higher. We got Meta, we got Google, we got Apple. What else do we have here? We have, let's see, Tesla, TSLA. Tesla, the lagger once again, of the three of the Magnificent Seven that are not doing so hot. It's Tesla, Google, and Apple. NFLX, Netflix, just unstoppable, pulling back from its high of 1340 down about 100 points off the high, but still in the context of an uptrend, although it has crossed below its 20-period moving average, which would indicate some short-term pullback bullish transaction. It is pulling back a little bit further than you would expect. Obviously, Netflix can have tremendous moves on earnings, so this is certainly one to keep an eye on going into its earnings. AMZN, Amazon, obviously, back near its highs. Amazon did get a little bit of pressure based on the fact that it got very, very heavily impacted from the tariffs, but certainly back near its highs and doing very well. So those are the main. Let's just take a look at XOM, ExxonMobil. These are classic American industrial companies. ExxonMobil also looking pretty good, still in the sideways range. Dow Chemical forming what looks to me like a low base. You would usually look at that on a weekly, but possibly Dow Chemical coming out of a low base. Low base usually takes 1, 2, 3, 4, 5, 6, 10 to 20 weeks of formation of a low base as it works price through all of its major moving averages. So Dow Chemical is one that looks good and is working through its past negative price. U.S. Steel on the upswing, right? A lot of talk about steel workers bringing steel back to the United States, etc. So these industrial companies are certainly looking good with the big, beautiful bill passed and some of the changes to the economy overall. Well, that's it for market analysis. And let's just wrap things up for this week. We are in the doldrums of summer. Next time we'll be back and we'll have a little bit of insights into earnings. So stay up to date with all things DAS by signing up to our monthly newsletter and email. Simply fill out the form at the bottom of the webpage at www.dastrader.com. Subscribe to our channel at DAS Trader TV and the DAS Newsroom. Follow us on social media at DAS Trader. That is LinkedIn, Twitter, Facebook, and Instagram. Everybody, I'd like to wish you a wonderful summer and stay cool out there. Till next time, trade well.